Okay, so with this Zoom call, I'm gonna go over my strategy once more. I've done it a few times with some of you guys. I know some of you guys, it's your first time here, and some of y'all might not remember exactly how the strategy goes. So with that being said, um, my partner will be going through what you need to do to set up your stocks account, your options trading account, but I also posted a link in the group. So if you haven't done that yet, you could do that later. So here I'm going to go through pretty much my whole strategy. So this is your chance to ask as many questions as you want, and this is your chance to pretty much review over what you've learned. And if you forgot anything, then make sure you know, um, get that down here. Make sure you get everything down, notes written, whatever you need to do, so you can remember the strategy and back test everything. So I'll show you guys how to back test too. All right, are we clear?
Yep.
All right, sounds good. So I'm gonna clear this. Actually, I'm gonna go on to some reason on demand. I'm gonna go on demand. And I'm gonna go back to a random day in the stock market. Let's do like August. Is anybody's birthday in August?
Yeah.
What August what?
28th.
28th. Okay, I can't do 28th. So actually, no, I can't. So I'll do 29th. 6 20 20 a.m. Or the 26th, because it's before your birthday. So your birthday's coming up the weekend.
Yeah.
All right. Just picking a random day. All right, so let it load. It's gonna load. Boom. All right, so I'm gonna clear everything and I'm gonna go through everything or most of it. Can I actually share workspace? I believe I could share my workspace with you guys. So whatever I have saved here, if you have Thinkorswim and you're using this too, I could just share it with you and then you can just download my whole like setup. I have two screens. So my other screen actually looks like this. Can you see my other screen?
Yeah.
So I have like, if I wanted to jump in on my computer, instead of me seeing it through my phone, then I could just look at the plays here, right? And then I would just there's a certain way you set it up. I could show you guys how whenever you're if you guys use the computer. So you can color code everything pretty much. Once you download Thinkorswim, pretty much just sure you go on chart, and once you go onto chart, that's what I use, and you can just pick up here like what stock you're looking at. And then once you pick the stock you're looking at, obviously you're going to see it like this, right? And right here on the side, you can actually you can add like watch lists. This was added by default for me already, so I'm able to see this, but I know there probably is a way to add this. So I don't know exactly how because I haven't it's here by default, so I just left it on here. But the purpose of this is that you click on what stock you want to look at and it changes the screen automatically. Or you could just come up here and type in the ticker symbol like SPX, SPY, TSLA for Tesla, etc. You can see everything else. So right now I'm on demand. And what on demand is instead of trading the live market, I could go back in time to trade the market the day of. Instead of me, obviously you can't make money because this is practice trading. You're back testing. That's what it is. But you can still enter trades and exit trades and see how much you'd be up, how much you'd be down, and test your strategy and practice your strategy and practice anything you learned. So that's the purpose of this, is to go back to the market. Right here I'm at 6:23 in the morning, August 26th. And you can go back as far as you want. I can go as far as 2010. That's how far back I can go, which is crazy. Anyways, so I'm gonna go over the strategy right here. You guys are welcome to talk. You guys are welcome to ask questions. I see that there's a lot of you in here. So to start off, pretty much is what do I have down here? So what I have down here is I use two indicators, right? Stochastic, pretty much I don't have like a detailed explanation of it, but stochastic is pretty much like think of it as an overview of like everything that's in front of you here. So pretty much it works similar to EMA lines, if you guys seen how EMA line works. Now the EMA lines are moving support and resistance lines. So these help guide the candles in the direction that the line goes. So if the candles are above, the lowest is EMA 9. These are the most common that people use. EMA 9, EMA 20, and EMA 55, right? EMA 9 and 20 are my most important. 55 is just here. I just have it here just, for extra just extra precaution. But pretty much for the most part, EMA 9, it's gonna, whenever the candles are above it, EMA 9 will push the candles up, and when the candles break below it, then EMA 9 will end up pushing the candles down. You see what I mean right here? How it pushes them down. So another thing that I like to look at is here's a good way of looking at it, is that since these are moving support and resistance, obviously what does that mean? That the candles are going to bounce off of these lines, right? The candles are going to bounce off of these lines because it's literally a support for these candles. So as you see here, it tries to bounce and it does, and the line carries it on the way up, and then up to this level you see that the candles try to break down, and in this moment it just so happened that it already had a bullish move to the upside, meaning that the market was strong. Buyers were more in control here, and the buyers weren't as strong here. The sellers started stepping in, and what happened? The candle broke down, and it ended up, instead of bouncing off EMA 9, it broke through, and the EMA 9 ended up pushing the candle to the downside, and it also broke through 20 EMA, I'm sorry, and same thing. So a good way you can look at it is that you're going to look for crossovers, right? The way you're going to identify movement in the market is by looking for crossovers. So if you see EMA 9 break above EMA 20 and 55, most likely 20, because 55 is just my extra, line for just precaution. But most people use 9 and 20 alone. So if EMA 9 breaks above 20, it's always going to break above 20 for the most part first, as you can see right here. It broke above 20 first. Sometimes, the EMA 50 is already below, but the most important, as I said, is EMA 9 breaking above 20. So as you see, when it broke above 20, there was a shift in the market. So this helps you identify shifts in the market. So what happened when EMA 9 broke above? I tell you that when the candles are above EMA 9, that is a strong sign that, the market can try to shift over. And right here it did. EMA 9 crossed 20 and 55, and then boom, it went up, right? Now,
Blue.
the blue,
Yeah.
yes, the blue is the EMA 9, the white is the 20, and the yellow is the 55. And you can color them however you want. You can actually go into your right here, this little science icon, and this is where you would add your EMA lines in. It's actually called moving average MOV AVG exponential right here, and you would click add selected, and they would add it right here, and the default is EMA 9. And you go into settings and you could change the EMA 9 to 20 or whatever, and boom, you can change the color here. And as you see, I'm gonna do red, and now that I did red, if I delete my old 20, you can see that it's now red. You see that? So I made the 20 red, but I'm gonna put it back to white. I'm just showing you guys how it works. You can change the colors. Now,
Yo, Ted,
what's up?
I have another question. So yesterday I was asking you about like for you to show us your indicators, but you didn't end up showing them, like because I had to leave early. So can you show them today? So I
Yes.
can of your indicators.
Yes. So let me go through this, and then after this, when I'm done, remind me that I need to go over trading view so I can show you guys trading view. All right.
Got it. Thank you.
So I don't forget. Anyways, so with that being said, EMAs are one of the top indicators for stocks that you can use, and they're one of the most important indicators. Another indicator I use is stochastic slope. There's different stochastic indicators. I don't know too much about the other forms, but I do use stochastic slope because I've seen other traders use it, and it actually makes sense to me. Now, I'll explain that in a bit. Then there's average true range. ATR helps you understand how much the price can move of the stock on market open. So I'll get to that as well. And then buy sell volume is a custom script that I have. It's this indicator here down here, and this helps me identify movement in the market as far as what candle in the moment is in control, like as far as buyers or sellers. So as you see here, let me see. As you see here, it's kind of hard to see for some reason. It's not as volatile here. Is there another day where it is more volatile? Huh, interesting. If I zoom in here enough, you can see, pretty much this is the volume indicator. So by default, you're going to have this. By default, you're going to have this here, right? But this is a custom script of this to help me identify who's in control. Instead of it showing me just one candle of green, it's going to show me who is more in control here. As you see, this candle here is more green. It's green. So you see that the sellers are fighting the buyers for control, and the buyers were stronger. So since the buyers were stronger, it resulted in a green candle. Now here you see the sellers are more in control for this candle up here. And of course, what happened? It was red. Next candle, same thing. Next candle, same thing, etc., etc. You see sellers are in control here, and it's fighting. You see how it's moving? It's fighting the buyers. So sellers are more in control here right now. And as I said, if it breaks below EMA 9, it ends up dropping most of the time. It broke below 22, ends up dropping more. Sellers are more in control. They're becoming more confident, which will result in a bigger drop, right? You see this? How it's just dropping. So Let me go back in time. It's 6:25 because I want to chart it. But you guys understand, right? Are we understanding of what's
Yes,
going
sir.
on? Okay, cool.
Yes.
So
Yeah, I'm
so
just taking notes right now. My bad.
you're what?
I'm taking notes. That's why my bad.
Okay, no worries, guys. No worries. So now with that being said, let's get over to stochastic. And the way stochastic works is that this indicator, the way I like to see it is there's like a range here. So these blue lines, when they cross above it, it means that the stock is overbought, meaning that pretty soon sellers could step in and take control because it's overbought. So buyers were strong, but if it's overbought, you know, they can lose confidence in a buy-in on the stock because it's already so high up or bought too much to the point where, you know, the stock naturally it usually reverses to the downside. That's just the algorithm. So it helps you understand like what could happen in the market condition currently, right? So under this line, it's when it crosses this blue line, it's oversold. So it could reverse to the upside. And as you see, this red candle was dumping and it was oversold here. It could have dropped a little bit more because it has to touch all the way at the bottom of the chart for it to like completely turn around 100%. But for the most part, when it crosses the blue line to the downside, it's oversold, becoming oversold, and it should reverse soon. So as you see here, it reversed. And what happened here is this is like a range. This purple line is a range of the current movement of the market, right? Of what's happening long term. So as the purple faces downward, that means that the market is going to shift down. As the purple faces upward, the market is going to shift upwards. You see what I mean? Like right here, it was shifting upward and the stock went up. Right here, it was kind of just doing its thing, shifting slowly upward, but the red crossed above, and that's a good sign, and it ended up moving up, right? So as the red line crosses this purple line, what happened here? This candle blew up, and you got to take into consideration what's happening in this moment is that the buyers were in control here. Let me delete this.
Oh, Dan, I have another question real quick.
Yeah.
So today I was like kind of like practicing like doing my own charts. So is there a way I could email them to you so you can like look at them, let me know like if like I'm on the right track?
Did you practice on TradingView or this on TD Ameritrade?
Like this exact website.
Okay, yeah, you can send it to me. I think there is a way where I can view it. So you can send it to me or share it with me. You can save your setup.
Okay.
Save your setup here. Save workspace as,
Oh,
name
okay.
it, and then just go on to share workspace. And I think you can like send it to me. See, it says
All right.
share, and you can email it, and I'll look at it.
Okay, bet.
So it'll
Perfect.
copy the exact workspace you have, and I'll just look at your charts, your chart indicators. But back to here is that as the stochastic indicator crossed this purple line, the long-term moving, whatever the moving average, it went up. You see, crossed to the upside, and the stock ended up moving up, right? So you got to take into consideration what's happening here. What is going on here? Well, the candles are below the EMA 9. So we're not even bullish. Bullish and bearish. Do you guys know what bullish term and bearish terms mean?
Yeah, doesn't bullish mean like the market is gonna move like up? So
Yes.
like do calls, and then bearish means gotta go down, right?
Down. Yeah. So right here, we're not even really bullish yet, but you can see that the candles are trying to break above. And if they break above, that will let the EMA know, like, hey, we're above you, like, help us move up. So then EMA follows the movement upwards and crosses the important levels. Now, once it crosses EMA 9, it still has to break above EMA 20 and 50. It breaks above EMA 20 and 50, and the 9 follows through to the upside. And this is what you call a crossover. If EMA 9 crosses over EMA 22, most of the time the stock is going to go up. It's going to become bullish for the moment. So what happened? It crossed and it blew up. Now you got to consider, okay, well, what else am I looking at here? Stochastic in this level is still not overbought. We can still move to the upside, right? So you see here is that it's bullish. We can still move to the upside. And not only that, but these current candles let you know who's in control. It's more green here, right? Let me see if I can somehow make it bigger. Look, this candle, the buyers were more in control. It's more green. This one was more green. This one was hella green. And what happened here? It blew up. So you can see currently who's in control, right? Does that make sense, guys? As you
Yep.
combine all these indicators to one, it becomes a strategy. Now, you got to look for entry points. Now, you can either enter off breakout or crossover. Most of the time it goes up. You can enter off crossover, or what I like to do to be extra safe is I wait till the current candle passes the previous candle wick levels. Now, the way these candle wicks are created is because at one point when this candle was forming and it went as high as this level, the sellers became stronger and they began to eat this area up. And as the sellers eat it up, it goes down. So it creates a candle wick. So when the candle wick is above the solid candle, it means that there's some sell pressure going on. Now, as it goes down here and it goes to the upside, that means that the buyers were eating up this candle at the moment when it happened, and that is buy pressure. But ultimately, the solid candle is the current move right here, is where the current move ended, because I'm on the 5-minute chart. So every candle, when you're on the 5-minute time frame, every candle is 5 minutes long. So as 5 minutes was over, it created a new candle, and this is where the new candle started, right? And from the new candle starting point, it crossed over EMA 20, and EMA 9 also crossed over 20 as well, and it became bullish. So buyers became confident, and what happened? It went up. So you can buy into here, right? And then it ended up crossing previous wick, which is where I like to enter, because to be extra safe, I like to enter here, and I would wait till it tests the next previous wick behind this candle, because this wick was higher. So it was testing this wick and it didn't break through. You see that? It didn't break through. So even though buyers are more in control, it didn't break through, but I wouldn't be scared because it went down a little bit. That's fine. But you can actually get in here and scalp trade and sell here, or you could have entered here and rode the wave to the top. It broke the previous wick, which became, I would have been more confident in this move, and boom, it went up to here. So once it started rejecting, or once it made it up here and you saw it was trying to break through this and it didn't, and it rejected, then you would have been like, okay, you know what? It's not breaking through. I'm gonna sell just to be safe and take my profits, right? 5 minutes later, new candle forms at this level because this one ended here. And what happened? It dumped down here, but it bounces off. Why do you guys remember why this candle bounced off this EMA? Do you guys remember? Can someone tell me? Anyone? Do you know why this candle bounced off this EMA right here? What does EMA act like? What does it act as? The EMAs.
Does
I
it
need to
does,
Because
does it act as
No.
a support line, or
Do you guys think it acts as a support?
it's because whatever the EMA, when the EMA lines cross when they're doing an uptrend, the candlesticks are gonna respect it and do the same thing.
Yes, but if the candle forms right here, as it formed here, before it went up, it went down first, right?
Yeah.
So it tried to cross to the downside, but failed because it was already bullish. Chances were that I was going to go up, right? But it's
Mhm.
still, the market fakes you out on purpose. It fakes out to trick you. That's what they do. So the market makers, or the algorithm, its job is to fake out sometimes, to trick you, to scare you so you can sell and freak out. So if you were in this trade holding, then it would have bounced down here And then you would have been like, oh shoot, it could go down. I'm gonna sell because I don't want to lose money. And then after you sold, it went up and it went up and it went up, right? So it tricked you. It's called a fake out. But obviously, if we're bullish, the EMAs act as a what? Tell me, please. What do they act as of? When the candles are above it and it bounces down to the EMA, what is the EMA's job? What does it
to
do?
support it.
As a support, right?
Yeah.
So
It's a support
the-
line essentially.
yeah, it's basically a moving support line. Yeah.
Yeah.
So then if it breaks through EMA 9, that's your first like major indication that, oh shoot, like something can happen here. Like it broke through EMA 9. I got to be careful. So then, as you see here, we were ready to not to the upside yet in the stochastic, but we were crossing towards like the overbought area. But it bounced off 22 because 22 is a strong support as well, and it went up. And as it broke up here, you could have entered at this level as it passes solid candle in the previous wick, or you could have waited for this level to pass these wicks, and then it would have broken up and you would have made a scalp and you would have made money here,
Wait,
right?
so another question real quick.
Mhm.
So if it's overbought, if the for example the option's been it's like overbought, is there still a chance that it's gonna like if the market's like still bullish, would it still continue to go up? Or is it like most of the time if it's overbought, then it's probably gonna take a dip?
So for the most part, if it's overbought, sometimes it keeps going up. I noticed that. It keeps going up sometimes when it's overbought. You know what I mean? So you can't really like predict exactly what's gonna happen, but you know that you're starting to get to the point where the candles could go back to the downside. So it needs kind of like a small little reset or a fake out, as you can say, a small little reset. And then as it reset, we're still bullish because you can see we're on an uptrend pretty much. And then what happened here is that right here, as it went back up, stochastic broke through to the upside once more. And then obviously broke down, and then it dumped a little bit because it was a little overbought, went down, went down, went down, went down. And then right here, this area, it started breaking back to the upside. Now, right here, there's no clear indication of a crossover, but you know that stochastic is pointing upwards. So you know that something could happen here. But you still have your candles to help you to see who's stronger. And you still have your EMA lines telling you like, hey, we're here, we're guiding you. So right here, as the next red candle formed, you saw that it was fighting. Almost half of the buyers and half sellers were in control. It was fighting. It was half and half pretty much. So buyers were a little bit stronger here, but it still actually it was kind of half, but it still didn't work out. So you see that the red candle formed. Usually when a red candle forms and it doesn't keep going up, meaning that the next few candles are possible that they're going to go down too and follow through with it. Or the next candle can break up and even blow up more. And this could be a fake out. But as you see, stochastic was already pointing down, red candle formed, and you're like, oh, it might be overbought. I'm going to wait till another clear indication to get in because I don't want to be too greedy and I don't want to, take that risk. I already made money off this move here. I'm going to wait. So as it went down, you see like, oh, shoot, like we're actually moving downward. And not only that, but once I get into creating my trend lines, they'll be able to guide you a little bit more too. And I'll get to that in a bit. But I'm explaining the basics. So as the candles were forming, it was more red, and you see that the sellers were more in control here. And right here, actually, it was almost kind of half too. But you see what happened here is that stochastic broke below. So you know it was going to go down most likely. Stochastic went, the candle went as far as breaking EMA 9, 22, and even 50, which gave you a indication that it could go down more as a bearish move. But even then, it's not for sure because why? Because what's going on here? EMA 9 pointed downward, as you can see, but it rejected back to the upside. But you see here is that EMA 9 wanted to go back down. So it was possible that EMA 9 could have went even more down to this area and crossed over the 20 and became bullish, right? But you want a clear indication of things. So if you're not sure that you're going to jump into a put, if you know what a call and a put is, you guys know what a call and a put is?
Yeah.
Yeah.
A call, when you buy options, call is to the upside and the option put is to the downside. So right here, I won't even buy a put because we're still bullish. It's risky to buy a put. You could do a scalp put, but it's risky because you still have to go through 20 and you still have to go through 50. And even then it rejected right here to the upside. So you're still bullish. You're still bullish. So I'm not even thinking about puts here. I'm thinking about calls still. I'm going to wait for another opportunity. And new candle forms right here. Volume lets you know buyers are stronger. And you're like, okay, broke through 20. If it breaks above 20, it's a strong indication that it's going to go up. If it breaks through 9, it's a strong indication it's going to go up. We're still bullish because even 9 is above the 20 and 50 level. As you see, we crossed over. So what happens? Now you start to think, oh, EMA 9 is going to carry these candles now because it broke above. Now I feel more confident. Right here, it's a little volatile. It was trying to fight, but obviously the EMA 9 proved that it was stronger. So what happened here? You probably would have waited a little bit here, but look, stochastic crosses over this average line, purple, to the upside, the moving average, the average like movement of the you know what's been happening. It crosses to the upside, and what? You see that as it crosses over right here on this candle, it crosses over. You see that, oh, we might actually go up soon. Next candle forms, fights and breaks down below EMA 9, but it's not strong enough. Then it starts becoming, look at this candle here. Buyers were in control. So right here, I would have been like, oh, shoot. Now, where would you enter? Do you guys know where I would enter here? Where would I enter?
I would assume probably when you see that it breaks the trend line.
So you can either line up a trend here. You can make a trend line here. I'm gonna get to that shortly. Trend line helps you identify breakouts, short-term breakouts. So as you see, now that I connect this line with these candles and the wicks, because you can connect it with the wicks or the candles, you see what? That that the candles are bouncing in this zone. Once you see that they're bouncing in the zone, like let's say that this candle didn't form yet, right here in this one, I can line up this trend line with these candles, with this one here, and this one here, and even this one down here. You see that? You see how I lined it up with these candles? And look, the candle bounced off this trend line, and then it went down first. It tried breaking through, and it actually did, and it broke through up here. The wick made it up here multiple times. Look, right here, right here, right here. You could have made a trend here with these two wicks, and the third wick broke on what? Oh my God, not a coincidence, or is it? What? It broke through this trend too. It actually hit the trend. I'm sorry, it hit the trend line and broke back down. So you know that there was some type of resistance here because the trend line helps you identify that. It's like another support and resistance area. If it had broken out of the trend line, it would have went up. If this had broken out on the downside of the trend line, it's gonna go down. But since we're bullish, then why would you even jump in a put here? Because we're bullish. You know what I mean? You see that the buyers are more in control in these zones. Like in the volume candles, buyers are stronger. You see that stochastic is about to break to the upside. You know, we're not even facing like downward. The market, we're in an uptrend. We're not even in a downtrend. Can I make a um a trend line here? Probably can. You know, you can make one here, and you can make one. You can make one out of like these. They're not going to be perfect all the time, but they're here to help you understand, like, what could go down with the market. And as you see, this is correct because look, as I pick off this candle right here, the wick, because it's why did I choose this wick? Because it's the lowest of what I'm looking at currently here. This was the lowest point of this chart, and this was the highest point of this chart, right? But at the time I didn't know that. But as you can see, I could have made a trend. Why? Because boom, right here, it did cross right here. It broke through to the downside, but obviously you saw at this moment that buyers were more in control, that at this moment that stochastic was still shifting upward a bit, and you see that, we're still bullish here, so we're still pointing upwards. We're not fully bearish yet. So I mean, here could have, you know what I mean, like things like that. So these trend lines help you identify, what could happen and where it could bounce at, where these candles are bouncing in between here. Look, so you see that they lined up with this wick, this wick, this wick, and pretty much this wick here, these wicks. And now long term that this is a range of where it could bounce. And it did. Boom, it bounced off the top of this trend line. So it works as a support and resistance, right? Wouldn't you say this makes sense? Does this make sense to you guys?
100%. Hell yeah.
Okay, cool. So I just want to make sure. So now right here, you see an EMA was going downward. And as EMA was going downward, it bounced off your trend line here, and you're like, well, yeah, we're still bullish, but I see some action going on. Stochastic crosses to the downside, volume, sellers are getting stronger here. You're like, oh shoot, I gotta be careful. The next candle was buyers in control, but then the next two were more sellers. And by the time you got to this point, you start to realize we're gonna hit a shift because this candle broke through this wick down. And look, it's about to bounce off EMA 9. If it breaks to EMA 9, I know that it could possibly go down to 20 and break even down too. So now I know here we're not bullish no more. So boom, I have my trend line. If it breaks out below your trend line, chances are it's going to dump. It broke my trend line. Next candle formed, broke this wick. Boom. Could have entered here, held it a bit to see what would happen in the next few minutes. Next 5 minutes, candle formed and what? Dumps. It breaks through 20. So now right here, you could have gone in a scalp. But knowing that you're bearish, knowing that the EMA is already pointed downward, you know that it could even drop more because it's already having moved to the upside. Stochastic crossed to the downside. Now stochastic is back down to this level where it's oversold. But if it's oversold, doesn't mean that it's gonna go up soon. But what it means is that it could keep dropping if it's oversold a little bit. It can still drop. But it's up to you. Yeah, it's up to you to identify that based off EMA and also your volume candles. So right here, new candle forms and it breaks through 20 because it bounced off 9. It breaks through 20. I see we're bearish now and it's about to cross 20 soon. So I'm like, oh shit, I'm gonna get in here. You can get in off breakout of 20 and take a little risk and just wait to see if it crosses through down, or you can get in from this little mini wick breakout to the downside and boom, it went down.
Wouldn't support and resistance lines help in this situation too?
Yes, they would. And this is why you'd have them once you chart everything. I'm about to get to that too. So this is just the basics of seeing it, of where the candle, could go. As you guys see, I already explained it. And look, it dumped. Right here, a new candle formed. It broke through this. You could have jumped in. It still has to break through 50, but still, 50 is not as strong. So it broke below 50 and boom, you could have caught a move to the downside ultimately here and then made some money here. And right here, it became a little bit choppy and stochastic broke through in the upside, but this happened, but we're not even bearish. So, we're not even bullish. I'm sorry. we're not even bullish, we're bearish now here. So EMA broke through 50, had another drop to the downside, stochastic broke below, sellers are in control, so you could have gotten another move here. And then eventually, what? Right here was a bunch of just, it was volatile. I wouldn't even jump in trades right here. Have some patience. You're gonna have to have patience and find a strong move to the upside or the downside. So what happens when you wait? Boom. EMA 9 crossed over 20 and 50. Another move to the upside. Buyers are in control. Stochastics crossed up. Boom. Made money. You can make money here. Things like that. You understand? So you see that you have to find strong moves to the downside or strong moves to the upside to help you enter profitable trades. If you're entering these kind of trades here, you're not really going to make money because it's not even like EMA 9 bounced off 20 here and it's just not safe. It didn't end up breaking through. It didn't cross over, right? So I would just wait till this crossover here for you to even consider entering a call, right? Then we can get to, and this is just 5 minutes. So now we can get into, I mean, this is just the basics. I can explain my technical analysis in another Zoom call, but I gave you guys the basics on this one. That way you can just, I don't want to overwhelm you guys on everything, but now you understand how to look at things, right? Am I clear? Does this all make sense? All right, is anyone confused?
Nah, yeah, makes sense.
No, everything makes perfect sense actually.
Okay. And then my next Zoom is going to cover me getting support and resistance. It's going to cover all that to take all this to the next level so you can understand even better. Now, these trend lines that I showed you are part of my technical analysis strategy, but trend lines help you a lot too, but I'll implement that into the next Zoom. But this is all going to be in my new course. So this is just the basics for you to understand for new members pretty much. And I hope you guys, if you have questions, now is the time to ask. So
Yeah, for me, my only question is I just want to see like the indicators, like your indicators. That's pretty much it. Other than that, I think I get it.
So you want to see my indicators
I got a
for
question.
what's up?
I'm on TradingView and I'm searching up EMA 9 and shit. I mean, shoot. There's a bunch of EMA 9s and
Yeah. So
is it like, do I have to EMA 9 and then add it and then EMA 20 add it? Do I have to do
you go on to MOV, average AVG exponentials with what I use, and you add selected 3 times. And when you add selected 3 times, it's going to show 9 3 times. So all you have to do is just go on the settings of each, put 9 here. Okay. Change whatever color you want your 9 to be. Then you do this one, put 55, whatever color you want it to be. Okay. And then 20, whatever color you want it to be in. Okay.
But what about on TradingView because it's a little different?
Okay. I'll show you. I'll show you on TradingView. So for this recorded Zoom, this is more of like the basics of TD Ameritrade network. There is another platform you can use for trading, which my partner will cover on his portion of the course. So he knows a lot about TradingView. I do too, but as far as the basics, I don't want to overwhelm you guys, but just to let you guys know that for the future Zoom calls, there's another platform you can use that you can set indicators on, right? And they will help guide you as well. Now, all this, I have to go through all this and explain it. I don't want to do this on the recorded Zoom yet, but this is to help you with automatic indicators that help guide you on entering and exiting trades. There's a way where you can set indicators on this platform to help you enter and exit trades. I'm not going to cover that here, but just letting you know. Now, the reason why I'm showing you this is because a lot of pro experienced traders or a lot of experienced traders, they manually chart everything themselves. I manually chart my stocks myself. Every single piece I manually chart.
Mhm.
So there's different ways you can trade stocks. You can set automatic indicators to help guide you, or you can manually chart yourself on levels of the chart. So I'm going to go through all that on my next Zoom technical analysis and show you how I set support and resistance, what time frames I use, what time frames are important to me, and how you can spot breakouts and how you can set trend lines and other things like that. So this is just more of the basics. Was this Zoom informative to you guys? Do you think this is
Yeah.
informative?
Yeah.
Yeah.
Okay. Did I cover enough or should I keep going? Do you think I covered enough?
I think you covered enough on the basics. Yeah.
Yeah. I definitely get like now that I think the basics are like kind of like I get it like way better now. Like I understand
Okay,
like
cool.
the EMA 9 like and all those other EMAs like way better
Yeah.
than
Okay, good. This is to help you guys warm up,
Yeah.
your mind on how. I know some of you know this already, but it's a recap for some of you. But for most new traders, this is very important. Now, last thing that I didn't get to is another cool indicator called ATR, which is average true range. Average true range helps you see when how much the stock market, the current stock you're looking at could move up and down. How far the average, how far can it move up in average and how far can it move down in average? So the way you read it is, first of all, before I even proceed with that, is if you see these gray columns, this is the actual trading day, 6:30 to 1 p.m., right? Before this is pre-market hours. You cannot trade options on pre-market hours. So you see right here, all this is pre-market leading up to 6:30 a.m. You can chart pre-market and see what could happen. You can help pre-market. Pre-market can help you predict what can happen during the trading day. But as you see, when the market day ends at 1 p.m., after market hours begins, and you cannot trade this no longer. If you're on SPY, you could trade it for 15 more minutes, but for a lot of other stocks, you can't no more. So then this line, you start seeing this is the morning pre-market hours, and it just keeps, going on, so on and so on to your current trading day. You understand? So, ATR, let me get to that. So now if you want to set your ATR indicator, guys, you're just going to type in ATR and you're going to add selected. Now, what I did is I implemented ATR into my stochastics indicator to help me just, I don't want extra space. I don't want another column of just the ATR alone, right? I don't want to just see that by itself. So, the way you read ATR is on the current condition of the market. Like I'm on demand right now, I'm going back in time. Current condition of the market looks like this, right? So the way you see ATR is you go on the tip, like edge of the ATR, and you can see that on the right side of the screen, on this area, or right here in this area, you see that the stock could move. It says 0.5, but the way you really see it is it can move $5.60 up or $5.60 down. That's how I see it. So it's just the average. So I predict that it can move $6 up from here and $6 down from wherever the market started, wherever the candles began. So the candle started here, right? So if ATR at this moment was $4, $5, the stock can either move $5 down or it can move $5 up eventually. Now, so far, the stock has moved down. And how much has it moved? It started at $4 and $4.1941, and right here it went as low as $4.1805. It only moved $1 plus to the downside. It didn't even move $5. So you know that it could still go down $5 if it wanted to. It has room to drop. Now, let's say that the ATR was $1 something and you started here and it went down $1 something. Now you know that um if it hit $1 something average to the downside, it's not gonna go any more down further because they already hit the average range that it can move down. So that means that it would reverse back to the upside. But if it goes back to the upside $1 something back to here, it doesn't mean that you moved to the upside $1 something and that it has to go back down. What that means is you're negative $1 something and boom, back to where you started, back at zero on average true range, back at zero, meaning that it could still move to the upside $1, whatever it was currently, right? So if it moves $5 down and it moves $5 back up and it moves $5 more up, it doesn't mean that like it doesn't mean that it can't move any further if it reverses back to the upside $5. It means that you get a reset because it goes based off of where the candle started in the beginning of the day. You understand? So it could still move up $5 up from the beginning of the candle's day. The first candle, wherever it started, it can move $5 up. Does that make sense? Am I confusing you? Or do you understand about average true range now?
No, I get it.
No, I mean, I
Okay.
get it. Yeah.
Okay, good. Because this is important because if average true range drops $5, like right here, it's dumping, and you're like, well, it hit $5, but now it says it can move up $5 or $3, or if it moves up, let's say if it goes down $5 and it moves up $3 or whatever it is, or $2, does that mean? Here's a better way. If your average true range is $5 and it goes down $3 and it goes up $1, does that mean that it moved $4 total? No, because it moved back up $1. So it has not moved an extra dollar total. What that means is that it moved $4 and it moved back $1. You're at the $3 mark. You still have until the $5 mark. So if it goes back down to 4, then you still have another dollar to go to until you hit your average range, right? So that's an explanation. That's like a simple way I could put it. Now, if it goes down $5 and it goes up to $2, then it obviously you're gonna think, well, average range says it's $5, but it went from 5 down and 2 up. Isn't that $7? No, it doesn't mean that. It means that from 5 down, you're reversing back to the upside. So now you're back to the $3 level. If it goes up $2, or if it goes up $3 from 5, then you're back at the $2 level. So you can still drop another $3, right? Or you can still go up back to the neutral zone where you started, and you can go up $5. So I hope that makes sense to you guys. And as the market progresses throughout the day, you look at average true range and it increases. Look, now it says $8. So we can move $8 below or $8 above. You see, and it's dumping huge. This is a lot of money. Tomorrow or whenever I do another Zoom, I'm gonna cover technical analysis, and I'm gonna show you guys how to jump in your trade and how to set trend lines, support and resistance, the best time frames, and pretty much my strategy of what I'm looking at. And I'll even do a live trade for you guys on the coming courses. I'll do a live trade on demand so I can show you guys how I do it and how much money I'm up, how I set my charts, pretty much how I set my charts on my computer. And I trade off my phone, but you can trade off computers. So I'm gonna show you how I set these and how you can use these to enter your trades. This information here. All right. Understood? Are we clear, guys?
Yeah.
Okay, cool.
Yeah.
So I hope this helped you guys, and we'll
yeah.
continue more in the future.
100%. Yeah.
So let me stop recording here.
Sounds good.
Anyways, guys, so I'll talk to you guys later. Possibly cover another one tomorrow. If you have
All
any
right. Wait, no,
questions,
get it tomorrow. Can we do it on Saturday? Because tomorrow night, like, I'm not gonna be able to join Zoom, and I don't want to miss it.
Yeah, we can do one on whenever we're all available. It's important that we can all make it. So
Yeah, no, because I'm not trying to miss like the most important one because technical analysis is pretty important.
yeah, it is for
Yeah.
sure. So if you guys have any questions, if you want to review this Zoom call once more,
Yeah.
if you're new, then I'm gonna post it in the group so you guys can see it. I'm gonna
All
stop
right.
recording here.